Welcome to the webinar.
Good evening, everybody, and welcome to tonight's webinar. My name is Parker Roberts, and I'm one of the real estate advisors here at Marshall Reddick Real Estate. It's so great to see so many familiar faces on the call tonight, and new ones as well. We have a fantastic presentation with three very knowledgeable and experienced co-hosts with me that I want to acknowledge before we start. Firstly, we have our controller, private money lender at Marshall Reddick Real Estate of 13 years, and Clarksville property owner, Patrick PRUNTY. We also have our Clarksville resident area specialist, our boots on the ground floor, office manager and realtor at ARRINGTON Rentals, Malika Womack, and then our preferred lender who specializes in conventional investment property finance in the Clarksville Metro, Mr. Ken Daniel. Now, one of my clients told me something that really resonated with me the other day. He said, Parker, I always thought real estate investing was only for the elite, you know, the super wealthy. And that is a common misconception, as tonight we will be going into details about a very affordable, high cash flowing market that we have been active in for 20 plus years, which is the Clarksville, Tennessee Metro. And specifically in Oak Grove, Kentucky, because that's where we find the best deals for our clients, as you will see some excellent investment properties in tonight's presentation that have great cash flow, that are rented, and have built-in equity. Here's a little bit about me. As you can see, I have my degree in finance from Arizona State University. I'm a Marshall Reddick market specialist, so I speak daily with our market reps and members like you about the latest deals that hit the table. Not only am I an employee, but also a real estate investor through Marshall Reddick Real Estate. And I pride myself in being honest, ethical, and professional at all times. A little bit about us at Marshall Reddick Real Estate, what we do. We're a real estate brokerage. We are a property manager as well. So we manage properties for our clients locally in Southern California. And then we're also a private mortgage lender. We make it possible to purchase residential real estate in our carefully selected markets throughout the U.S. And our mission statement is to be the bridge of connecting each investor to financial independence by providing exceptional real estate education, just like tonight on the webinar, or we have free real estate events throughout California as well, mentorship from somebody like myself as a real estate advisor, and trusted purchasing system for hand-selected investment properties and mortgage and trust deed investment. How do we choose where to best invest? I get this question all the time. You have to look for a strong job market. The economy has to be diverse, strong education system as well. The housing has to be affordable to make the numbers make sense. Low vacancy, which ties directly into the job market. And most of all, reliable property management. Throughout tonight's presentation, we'll touch on these, 6, 7 points on Clarksville and how it hits each one. And most importantly, landlord-friendly states, not tenant-friendly states too. Guys, as I mentioned, we've been in this market for 20 plus years and know it like the back of our hand. Now, we created this market data packet so you all can learn and get familiar with the market too. This packet goes into the demographics, housing and job market, and so much more. And you can download it for free under the handouts tab under your control panel. You'll be able to kind of take a look at the market and go into the specifics too. Now, to make sure you guys are all awake, I wanted to do a quick poll. So I'm going to launch this poll. All right, and I'm interested in the Clarksville Metro because the homes are pre-rented with tenants in place. The homes are remodeled and turnkey. The homes offer high cash on cash. Personal reasons, family, birthplace, etc. And I have no idea which market. I just kind of stumbled upon this. So I'm going to give you guys about 15, 20 more seconds to answer these poll questions. They're completely anonymous as well. So don't worry, we won't share this with anybody on the webinar too. So it looks like we're getting a good amount in. We have one in the front. Second place is close behind, so get your votes in. And I'll give it 3, 2, and 1. And I'll actually share these results with you too. So as you can see, 41% are looking at the high cash-on-cash return, which is perfect for this market. 24% in second place, they have no idea, which is totally fine. And then there's a tie for third and fourth at homes that are pre-rented and remodeled at 18% each. All right, and without further ado, I want to bring up our co-host here. He is the controller and private money lender here at Marshall Reddick, property owner in Clarksville, actually Oak Grove more specifically, Mr. Patrick PRUNTY.
Hi everybody, how are we doing tonight? My pleasure to be with you guys, and as Parker said, with such a wonderful opening, thank you. I'm going to be kind of the primary host tonight, but we are going to hear shortly from the boots on the ground, Miss Malika Womack, who is the property manager and office manager at ARRINGTON Rentals, as well as from Ken Daniel, who is our conventional local market specialist in terms of lending. So number one, what you need to know about me is that I've been with Marshall Reddick Real Estate for a while. I pride myself on that. I've seen the ups, I've seen the downs. I've kind of done it all, right? I own rental property in most states around the country, and I do loans on my own personal money in many states around the country, most of which I do those channels or those investing channels through Marshall Reddick Real Estate. So the properties I own and the loans that I've done them with our regional reps that are on the ground. So like Parker, I kind of have the inside track into what's going on in the day-to-day. As we've also mentioned, I own property in Oak Grove, right? And I'm constantly looking to buy more property there. And one of the major reasons, as you guys hammered home already, is simply that the cash-on-cash return is very good. And better in this market than in most others that we are centrally located. So we're going to talk a little bit more about that, but let's move right along and get into the specifics exactly about what you guys want to hear tonight. So first and foremost, I always recommend, plane flights are not expensive these days. Get on a plane, go out to the market, and tour with the regional rep. I mean, it makes all the difference. So I flew out to actually into Nashville. That was the best way for me to do it. And it's only like a short 40-minute drive from Nashville, which is totally booming right now, you guys. And Clarksville's kind of feeding off of that in addition to having their own economic base and employment and et cetera. So anyways, I flew in there, and I highly recommend you go that route. Take your lady or your significant other, your man, and go down to Lower Broadway. I'm sure Malika and Ken can both identify that Lower Broadway and Tootsie's Orchid Lounge, like that's where it's at. In any case, make sure you get out to Clarksville and meet with Malika and Ken and John. You're going to be happy that you did. So these are some of the photos that I took while I was out there. I think that was in 2014, but it's just a beautiful area. And I had a really great time. I love Dunkin' Donuts, so I throw a little photo of that in there at the bottom right. I hope you guys enjoy that. In any case, as I mentioned, it's just outside of Nashville. So on the screen, I'm not sure if you can see my cursor, but I'm circling around the Clarksville Metro. And then up here to the left is Fort Campbell, which is one of the major economic drivers that we're talking about. They're certainly not the only game in town. But then Oak Grove is just on this other side. And this dotted line here, that's the border between Kentucky and Tennessee. So Oak Grove is actually on the Kentucky side, and Clarksville is actually on the Tennessee side. But the metropolitan area encompasses a number of small cities with Clarksville as the anchor, which again is about 40-minute drive outside of Nashville here, which is the closest major metropolitan. So now we're taking a look at the first property I bought in Oak Grove. Was a fantastic rental, and we're going to be looking at a lot of very similar properties tonight. Before we get any further, let's jump into one more poll. We just love getting feedback from you guys. So we're going to go ahead and launch it right now. And the question, when investing, I plan to do so using conventional financing, so like down payment and your loan. Hold on a second. I think we may have a technical difficulty here. See if we can reopen it. Apologize. Unfortunately, guys, I think it looks like we may have already closed the poll inadvertently. So the question was, just so we all know, is you plan to invest how? The number one question was conventional financing. The second option was private financing, not a conventional loan. And the third option was self-directed retirement cash. And the fourth option was just paying straight cash. So if you guys wouldn't mind, you could still provide feedback by typing in your chat box again and letting us know, when looking at this market, are you planning to buy with conventional financing, private financing, self-directed retirement cash, or personal savings cash? So continuing on. We do a lot of data analysis here at Marshall Reddick Real Estate, and I love that. As Parker mentioned, my role here, besides private lender, is as the controller, and so I just am a numbers-driven guy. And you can get this type of data right here that you see on the screen from our website. It's very cool, and I want to make sure you guys take advantage of that. Parker Roberts is one who can get on the phone with you and point and direct you on the website on how to find this type of data if you don't already know how to do so. So one of the things I wanted to point out is on the right-hand side of your screen, you're looking at since 1996, the average, or the median, I should say, sales price for single-family home, right? And then to the right of the prices is the annual appreciation for that same data set. And one thing that sticks out the most to me is there literally is like no down years. I mean, the small drops that they did have are less than 1%. So this is what I call as one of those steady Eddie markets, right? Something to round out your portfolio, one that you just sit out there and you literally don't have to think about it. I'm going to compare that with another market that we are actively in and have been for many years. That's Phoenix, Arizona, as you see on the screen now. And so with this one, notice that the appreciation trend on the graph, it's at 3.46%. That's just about the same. So this gray line is mimicking what's going on in the Clarksville market. You just don't have to deal with these huge upswings and downswings, right? So when you invest in a market like Phoenix, if you get in at the right time, like, in 2000 or even 98, and then you were able to sell like in 2006 because you had a crystal ball, then you would have done fantastic. But you have to worry about the timing more in an up and down, boom and bust market like Phoenix, whereas in Clarksville, you don't have to really worry about that because the statistics that we've seen just show us that it continues to just steadily rise. Okay, so keep that in mind when doing your diligence and investing. Okay, I mentioned Fort Campbell before, and when we're talking job market in this metropolitan area, you just have to hammer it, right? It's the second largest military base in the world, and it is absolutely enormous, right? It spans 105,000 acres, and, it was opened in 1942. I believe that's shortly after World War II, and it's just a behemoth. It provides a lot of jobs to the area, and it has some of the most specialized and elite airborne divisions of the Army. So their, pride and joy is the Screaming Eagles, which is the 101st Airborne Division. So again, this is definitely a military market, but it's not the only game in town. Now, without further ado, I'd like to bring on Malika Womack to introduce herself as well as the broker out there as we get into a little bit more detail on the job market. Malika, are you there?
I am here. Hello, everyone. First of all, John Arrington, that is my boss. He is the broker and the owner of Arrington and Associates. He's been doing this for a long time. His family, his father before him did it. So he's really good at what he does. You won't find a man that's more loyal and honest than John Arrington. We love what we do at Arrington and Associates. We love bringing on new investors, managing their property, and taking care of them. That's what we do. I play a couple of roles. I wear a couple of different hats. I'm an office manager, so I am the first one that comes in contact with your tenant. I am also a realtor, so I'm the one that shows them the property, and I make sure that everything in your property is running smooth. I make sure the tenant you got a good tenant in there. I try my best to do so, and just make a rapport and keep the line of communication open with your tenant. I'm the liaison between you and your tenant. So I try to make sure I establish a very good relationship from the top. We like to focus on making sure your properties are, kept up, making sure that whatever questions that you have, any concerns, if you are a new investor and you have some questions that you may not feel comfortable asking one of the team, Patrick or Parker or someone, we want to, make sure that you're very comfortable with us and everything with your statements and how your property is running.
That's awesome. Yeah, I just want to highlight on there, this is our longest standing regional rep. I mean, I started with the company in 2003, and John had already been affiliated since 95, so almost an extra 10 years on myself. And Malika, you've just been wonderful in terms of my property, and I just can't say enough about your customer service. If I need something, I just know that, one phone call, one email, whatever it takes, I'm going to get what I need, and that's priceless when it comes to property management. So I want to let you know how much I appreciate you.
Well, you're very welcome, and it's my pleasure.
Awesome. You want to tell us a little bit about some of the other major employers in this market besides Fort Campbell?
Absolutely. We have a lot of different jobs that are here. Employment rate is like around 4% for unemployment, so that's very good because of the jobs. There's a lot of opportunity in jobs coming here to Clarksville. One of our big companies right now that's really booming is Hancock. Hancock is a tire company. I thought it was around 1,000 employees and 1,000 jobs that they were hiring for, but I found out through someone that is actually around 1,800. He's a manager there, and it's a coincidence. I met him. He's looking for a home for him and his family. He actually relocated here from Korea. He came from Korea and is moving here and needs a home to rent and everything. And he was telling me how many employees and more jobs and they're adding on and, expansion and everything. We also have Canova, which was formerly known as Gateway, the medical center. They have expanded onto that as well. So that's more jobs. So the more jobs that are here, the more people that are coming that need a home. They need a place to stay. Some people are going to be here on assignments for 2 or 3 years or 4 years, and they want to look for a home. They don't want to move and keep moving. So it's always people looking for, tenants looking for a place to live. So we don't keep our homes vacant, for too long because they're needed.
Absolutely. I was actually really surprised. I was brushing up on some of my own research at Austin Peay State University at the D1 school has, all the major sports, football, basketball, on both the men's and women's side. And they actually employ, I want to say almost 1,000 people. So a much bigger employer than I had thought. And most of you guys out there listening, you've heard of Train before and Bridgestone. Bridgestone's another tire company. And Train, if I'm not mistaken, is either Train is HVAC. So right. Nonetheless, guys, realize that there's some major employers here. And I also have some big news, especially for those techies there in the Bay Area. If you didn't already know, newsflash, Google is coming to town. So there was a Hemlock semiconductor plant that was built, a brand new state-of-the-art facility, and this was a number of years ago, and it never got off the ground. I'm not exactly sure why that happened, but Google announced that it acquired this behemoth of a facility, and they're going to be putting in their 15th data center. So this is obviously a huge investment. I put the web link on there. There's a number of different websites reporting this story, but it's about maybe a $600 million investment, and it's going to bring a lot of new full-time jobs to the area. So just another one of those tidbits of information that you're going to get from Marshall Reddick Real Estate. Okay, moving along, let's get to the bread and butter, guys. So why do we like this market? I mean, for me, for Parker, for all of us here, we're talking newer homes. And I know you can renovate older homes, but the bottom line is with newer homes, you're just going to get less major maintenance items. So the homes that we're looking at are 1990 and newer. Price-wise, certainly the median home price, as we're going to get to, or as I guess you saw already, about $130 for this metro area. But we're looking and identify and try to get for you guys the $70,000 to $95,000 range, and those provide pretty much solid rent. So we're talking the 1% rule that everyone's heard before. So if your monthly rent can be 1% or more of your purchase price, your cash-on-cash return is going to be pretty dang good. And that further is brought to your attention here because what you're going to notice about this area is that it has extremely low property taxes, and the cost to insure in terms of annual premium are also going to be extremely low. So we're looking at cash flow monthly, again, after our conservative factors for maintenance and vacancy at $130 to $200 a month, and of course cash-on-cash return of 6 to 9.5%. A lot of people aren't quite clear on cash-on-cash return, so I threw that formula right there for you all to see. And I've got use the website flashing. Please, you guys, I can't hammer it home enough. Make sure that you talk with Parker so that he can show you exactly how the calculators work. He can show you the returns. And I just thought it was so cool. 2 days ago, we're having this conversation, and I took a look at our website and I sorted it by all available properties. There was about 135 or so available properties at that time, and we sorted it by single-family home and by top cash-on-cash return. And 4 of the homes, the 4 that we're primarily presenting tonight, were in the top 10 of those 130-plus available properties in terms of cash-on-cash return. So if you don't know how to run that query, make sure you ask Parker. I mentioned conservatives. So if you guys haven't read our Reddick property rating, you need to do that. You can get it free on our website, and it's going to change the way you think about investing. And primarily it revolves around the tenant that you're going to get based on the home you buy. So right there for us, A-class property, we assign 8% for vacancy and 8% for maintenance, and that percentage is based on the gross scheduled rents, and then so on. So for B-class, it's 10% and 10%, and for C-class, it's 13% and 13%. So those are very conservative numbers, but we have learned over the years based on our own experience and our own rental property that these will ring true. So note when you're looking at competitors of ours and maybe you think that their cash-on-cash return or cash flow looks a little better than ours, make sure you understand what percentages they're assigning in terms of maintenance and vacancy. So you've got to compare apples to apples, guys. If we used their figures, geez, we'd be knocking it out of the park, and every property would have more than 10% cash-on-cash return. Okay. So again, I'm a numbers-driven guy. Let's talk about that. So just comparative here. Single-family home value, again, the median, which if we're not clear on is just the middle number, which I think is a good delineation as opposed to maybe an average that can be more easily skewed. So 183 is the average. All the statistics, I might say, in the left-hand column are as of December 2015, okay? And I grabbed all of those from the deep research provided by Zillow. So 183 is that median single-family home value, and for some perspective, number 1 and number 2, respectively, were San Francisco, Oakland Metro, and then LA, Long Beach, which they include in their model Orange County as well. Orange County is not separate. And Clarksville comes in at 132.9. So you can see, get yourself some perspective, it's just affordable. Household income, I really like this. This is a good one, right? So the U.S. is about 55, and then, of course, San Francisco shows up again. But I was surprised that Washington, D.C. area came in number 1. What you'll see is that Clarksville, Oak Grove's not really that far off in terms of the income. And what it rings home is then when you match the two, you know, what it costs to live and what you make versus what your home prices are going to look like. And it just blows me out of the water that, again, San Francisco, Oakland, and Los Angeles, Long Beach, so SoCal area, you know, really how high it is in terms of price versus what you're earning, right? And then again, Clarksville coming in at only 2.86. So, I mean, these are some of the statistics that I look at, that we look at when we're investing, and the affordability factor in Clarksville Metro just makes it super desirable. To the right, just quickly, unemployment. You always want to know, and as Malika mentioned, Clarksville a little bit over 4.4%, coming just under the total average for the United States. And of course, we've got some of the smaller markets there as 1 and 2, just to give you some perspective. Also, tidbit, did you guys know that Tennessee has no state income tax? Now, I should say and clarify that investment and dividend income is taxable there, but as far as like your W-2 employment, there is no state income tax. Very desirable place to live. In Kentucky, interestingly enough, does have state income tax, but it's very low, 2 to 6%, which, by the way, guys, we here in California, which most of you are, we're over 13%. Yikes. But anyways, regarding Kentucky, since it's highly military in the whole state, but the military income is tax-free at the state level on the Kentucky side. So there really is no difference in terms of those tenants and which side they live on. That's a common question I would get, you know, well, shouldn't I buy in Clarksville because it's the better tax treatment for a lot of the renter base, which are going to be military? And I'm like, well, it really doesn't matter because as far as the military goes, it's tax-free on both sides. Yeah, that's another photo of me when I traveled to the area. I'm outside John Arrington's office. I just had such a good time, and I can't harp on it enough. We had some clients recently go out to the area, both of which put properties under contract. They were just so pleased with prior presentations that they've heard. They took my advice. They went out there, liked what they saw, and they wrote a contract and are closing here shortly. So as we do that, I'd like to bring in Malika Womack one more time, actually second to last time, to give us some specifics on their property management, pricing and whatnot. And guys, again, property management is the X factor. It can make or break your investment. If your property manager is not as good as gold, man, you could experience high maintenance and vacancy costs that will just kill your return. Malika?
Yes. So, okay, as you're seeing, we manage quite a bit of units for the size of company that we are, 535 to be exact. And I talked to Patrick about this just yesterday. We was having a conversation. Actually, it's about 96.8%, so quite almost at 97% occupied. And we normally stay pretty full. You know, every once in a while you might have about a 30-day turnaround, and that's because of different things. That's because of factors like once a tenant moves out, I will inform the owner that the tenant is moving out in 30 days, and once they move out, there's things that needs to be done to get it ready for the next tenant. And so the turnaround time is about, 30 days or so. And once I tell you, okay, this is what needs to be done to get it ready, it's very important that you go ahead and give me the approval so I can get that done to get you a tenant, because we constantly have troops coming in. We have people coming in needing a place to live, and I try to get them, the properties ready as quickly as possible to get prepared for someone else. We have very good rates. We do not pay, we don't charge any kind of maintenance fee or anything. We $200 lease fee, that's what the owner has to pay. You pay that to the realtor for finding you someone. So, because it takes a lot of time to try to find that right tenant, try to find someone who is going to take care of the property, pay their rent, things of that nature. So you pay the $200 leasing fee. That's not something that you pay every month. You pay that per tenant. So if your tenant signs a year's lease, you pay it once that year. If they sign a 2 years lease, then you won't have to pay it for another 2 years. You pay a 7% management fee. That's what we charge to manage your property, to make sure that, everything is running smooth in your property, the property is being taken care of, the maintenance is being done, rent's being collected, the rental income is sent to you, so that you pay that 7% fee. When you first initially sign up with us with your management agreement, you pay a one-time $350 setup fee. Basically, that's a really good discount, because normally, property management charges like 10% or more. So that's really good to get a 7% management fee.
Yeah, that's awesome. You mentioned it there briefly, but I want to review a couple of items here that Malika just told us. First and foremost, as I just showed on the screen there is no release fee. So if you paid that $200 lease fee to procure the tenant, and that tenant stays and signs another 12-month lease, there is no release fee. That's uncommon, as most of you know, rental property owners already. And there's never an upcharge on maintenance. I see that continually more and more in property management agreements around the country, and you guys got to do yourself a favor and make sure that you verify that, because that's not something that people want to tell you up front. But nonetheless, these are some of the lower fees that we see in the areas that we're involved in. I mean, and for a 50% of the 1 month lease, or even 100% of 1 month in terms of that lease fee. And 7%, man, I have not seen anything that close in a while. So, Malika, thank you. Moving along, I'm going to bring on Mr. Ken Daniel. Ken, are you there?
I'm here. I've been listening and been really intrigued by what you have to share.
That's awesome. Yeah, thank you so much for being on the call. I know it's later for you out there, but financing is so key to a lot of our members being able to make that purchase, and I just thought it was important to bring them on to learn a little bit about you, and hopefully you can stay on if we have any financing questions. So Ken, tell us.
Absolutely. Is there anything you'd like me to share with you right now about the financing, the type that's available, and initial investment, and that sort of thing?
Just tell us a little bit about yourself first, and then, what type of programs that, of course, you have available, and the types of rates that you're seeing. Just a short overview would be good.
Well, I've been in the mortgage lending business now for almost 17 years, and my approach to lending is very similar to everything that you've been sharing with the attendees on this webinar, and that is honesty, integrity, do what's right, provide excellent service, try to make the loan process as stress-free and enjoyable as possible. So that from that perspective, that's my point of view on how to service a client. In regards to lending, obviously there's a down payment money that's required, and it's going to range from 20% down to 30% down depending on the number of properties that an investor might own. And currently I'm seeing rates right around in the mid-4s for us. And, when you figure those numbers into the price range of the homes that you're recommending, the cash flow is tremendous. my wife and I own 4 properties here, and we've always had quick turnaround on renters. When they move out, we typically get another renter within a short time. One we recently rented within 2 days of a renter moving out. They were reassigned to another military base. We rent primarily to military because they receive basic housing allowance, and we have them deposit the money right into our accounts. They never even see it. So we love it.
Very cool.
Yeah.
Yeah, and just for everyone's information, you are licensed on both sides, right? Kentucky and Tennessee, so no issues there?
Absolutely. And I've known John for many, many years. His brother and I are high school friends, so we've known each other for a long, long time. You can tell by my photo that I'm an old guy. But John's a great man, honest. I mean, he's a super guy. I remember when I bought my first house from him, I said, John, do you think you can find me a renter for it? And he says, Ken, there's one in there. And I couldn't believe it. That was great. So it's been a great experience. It really has.
Yeah, and you can offer the full spectrum, right? 15-year fixed, 30-year fixed,
of course.
20%
yeah.
down, 25% down, and no restrictions on your end?
Absolutely.
That's awesome.
15.
Good.
Obviously, I do 30-year mortgages to keep the payment, and I'm speaking for myself as an investor. I use 30-year mortgages to keep the payment at their lowest level and increase the cash flow. But obviously, everyone has their own opinion on how they want to manage their money, and that's part of the way I handle the relationship with my client, is to try to understand what their objectives are and meet those objectives with the different type of lending programs.
Yeah, very cool. So I appreciate that. And as far as documentation purposes, it's just the standard, right? You're going to ask for the tax returns and the W-2s unless they're self-employed. And I'm sure you've got a list that when somebody's ready to engage with you, that you can get them that loan application and that document request sheet so that they can quickly move forward with that pre-approval.
Absolutely. And it's pretty basic, just as you said, nothing unusual. Obviously tax returns, bank statements or other asset verification, and then, proof of income. Pretty simple.
Very cool. Awesome. Well, Ken, I appreciate that so much, and I imagine we're going to have some financing questions, so if you don't mind sticking around, I might shoot a question or two your way.
Okay.
Yeah, thank you very much. Okay, guys, so let's talk about the properties. So we have a number of properties that we're going to go over, kind of a spectrum from C class, B class. We've even got an A class. And again, these are handpicked, right, exclusively for you guys. These are properties that we do not put on the MLS. We place tenants in them. Otherwise, we could put them on the MLS and, frankly, probably sell them for more. But this is one of those advantages that you get as being a respected client of the Marshall Reddick Real Estate Group. So I'm going to jump right in. Timberline. Okay, so again, this is going to be a C-class property based on the sales price and the median home price in this market. And just so you guys know, I have this particular pro forma dialed in with 20% down. And I think for the lower priced properties, and in Clarksville, Oak Grove, we're talking about from 70 to like 79 or 78-ish. For those, if you have the ability to go with 20% down and you don't get that much of an uptick in the rate, this is an opportunity for you to get all in for under $20,000. Now that's very hard to do and increasingly getting harder and harder to do as prices go up. So for a first-time investor doesn't own any rental property, a property like this, again, you can get in for very low. I mean, your 20% down payment's under $15,000, and our estimate in terms of closing costs all out the door, they're probably a little high, but coming in a little over $4,000. So solid rent, $775. And then just to illustrate for you guys, we won't do this on every single one, but if you can see my cursor, the monthly income's a little over $325. But then, of course, we factor in a heavy 13% for maintenance and 13% for vacancy. We even factor in that leasing fee. So we're saying that your ultra-conservative cash flow is about $113. This pro forma doesn't show the cash-on-cash return, but I can tell you that, and you can see on our website, that under this pro forma, it's running just about 7%. All right? You can always get a description down in the bottom right of the properties, but these all come ready to go. Moving along, property on Washington is brand new, guys, just available yesterday. And another great property. This one's got a garage, attached garage. The home that you saw that I bought before didn't have an attached garage. It doesn't really hurt the rental ability that much. You may get a shade lower on the rent, but nonetheless, you know, it's not the end of the world to not have one. So this price is a little bit higher, back to our normal 25% down on this pro forma. And this is also one of my favorites. You get the stainless steel appliances on this, guys, and some nice flooring, laminate, vinyl, and carpet. That carpet's only going to be in the bedroom areas. That's desirable for tenants, but otherwise that laminate and the vinyl is going to keep your maintenance costs down. I also wanted to make a point to those listening tonight that are highly considering making an offer. Any of these properties are available for an offer, but if we have an accepted offer by end of business on Monday for both the property on Timberline and this brand new one on Washington, they already offer a 1% closing cost concession and a 1-year home warranty. For that full price offer, I'm going to throw in an extra 1%, so a 2% closing cost concession for both Timberline and Washington. But again, we got to have a contract accepted before the close of business on Monday. Malika, you were talking to me earlier about Indian. You wanted to tell us a little bit about it?
Yes, that is one of my favorites that we have available right now. It is a really gorgeous little house. It has new appliances. It has a nice backyard, really big backyard. It's in a good location. Like the location of Oak Grove is just, the neighborhood is just so peaceful and serene. It's going to have some new paint. Everything inside out. It looks really good. It goes very well when I show it. I showed it to a couple of prospects, and it's already rented. It's already, the deposit is down. Everything's working on that one. That is a nice home.
Yeah, I noticed the brand new HVAC. I mean, obviously we check out the HVAC every time, but this one's got a brand new one. It's going to keep that maintenance cost down over the long run. And you mentioned this one's rented. That's awesome. The next one we're going to see, I believe, is also rented, but the two prior, the Timberline and the Washington, not yet rented, but will be before you close. That's kind of a guarantee that we offer in our turnkey program. But thank you, Malika. I appreciate that.
Well, Pat and Malika, I do like your picks. This is Parker for everybody on the webinar. I think this is my personal favorite. 116 Gleaves Lane, a new tenant on a brand new lease, 12-month lease there, rented at $925. So you can see, as Pat touched on earlier, everyone's kind of looking at the 1% rule, rent to price ratio. And this is above 1%, so great cash flow. Your monthly income line item is just shy of $400 a month, and then ultra conservative maintenance, vacancy, and then the leasing fee factored in as well. You can expect $200 a month of positive cash flow. Pretty sweet deal if you ask me. You know, this property has a new roof, new paint, that flooring that Pat touched on with laminate, vinyl, and carpet in the bedrooms. And gosh, throw on top of it a standard 1-year home warranty. This is my favorite. All respect to Malika and Pat, but I think this is the one.
Yeah, no, I like this one too. I mean, I really like that that front porch. I think that adds a little value. It's one of the reasons I think maybe you got that higher rent at $925, but this one's definitely a home run. And then moving right along, guys, we've got Meredith Way. Now, this one's on the Clarksville side. The 4 that we looked at prior are all in Oak Grove. And again, Oak Grove is just a small suburb of Clarksville. I mean, they're pretty much one and the same. I remember when I was out there touring with John, I was like, so when are we going to Oak Grove? And he's like, well, we've been in Oak Grove. You know, I mean, you don't even realize when you cross that Tennessee-Kentucky border, it's just all melted into basically one metro area. But nonetheless, this one here is on the Clarksville side. This is a little bit higher priced. And to give you some perspective, on the Tennessee side, you are looking at, for the most part, if you're in good neighborhoods, a higher price point. But you're really not looking at that much more in terms of rent. And so that's why the really good deals for investors are going to be on the Oak Grove side, right? You get that 1% range. So still pretty good numbers on this one. I mean, it's nearly new. I mean, 2,000 build, 1,200 square feet. You get a 2-car garage, which in my experience is not ultra common. Certainly for us in California and for a lot of other markets around the country it is. But a 1-car garage or no garage is not uncommon in this metro. But this particular property is just a straight resale. So, you know, it does need a little bit of work. It's not one of our turnkey pre-rented. So this is currently vacant. But you know what? If this is something that moves you and you want to step into a little bit higher price point with an A-class property that's going to experience less maintenance and vacancy, hey, make an offer. What do you have to lose? Guys, understand that not everyone can qualify for certain reasons for conventional financing. Now, a lot of people would say, well, what do you mean? Bad credit? No, that's not what I mean at all. So private financing is something that we at Marshall Reddick offer, and this specifically is good for people that maybe want to buy rental property inside a self-directed retirement account, or perhaps the loan amount that they're looking for is under $50,000, or perhaps you already have 10 mortgaged properties. So those are the top 3 scenarios where we have clients coming to us who are saying, look, I have an excellent FICO score. I got plenty of money in the bank, but you know what? Ken can't do the loan for me because I already have 10 mortgages. Or Ken can't do the loan for me because the loan amount's under $50,000. Or I need a non-recourse loan for my self-directed IRA and Ken can't do that. Look, if you can qualify for conventional financing and get that low 4% rate, I want you to do that. But if you can't and you still want to get in the game, I can help you with very, very good loan programs. And to show you how good, I'm bringing up that Indian property again. Now, this is one we looked at just a few slides ago, but this pro forma is set up under one of our commonly used private financing options. Okay, so that option is it's a 30-year amortized loan with a 10-year balloon. That means you're going to have monthly principal and interest payments as if the loan to be paid off over 30 years. So you're paying down the principal. However, at the 10-year mark, you are going to have a balloon payment, meaning you have to pay off the remaining principal balance. In this private financing program, we require 40%, that's 40% down, and the interest rate this program carries is 7%. So get on the screen, noticed in the pro forma, I'm circling the down payment of 40% and 7.5% interest rate. Nonetheless, I challenge you guys to find other markets where you can do this 40% down at the 7% and still come out with a fantastic monthly cash flow, a pretty good cash-on-cash return, and another high return on investment. Okay, so again, this is going to be for specific use only, but I want you guys to know that we do have private financing available. All right. Now, I just wanted to kind of wrap it up here. I love the picture that Pat had put on here with that old school cell phone. But what day and time would you like to discuss about these homes? There's the chat bar there. Just give me a few that work best. I'll do my best to accommodate with your guys' schedule and to really help out with getting in contact to chat in more detail about these properties. As I mentioned, a lot of people I'm already working with that are on the webinar, and I'm excited to meet the new people that are on this webinar as well. So go ahead and chat or type in that chat bar best day and time, and I'll be sure to kind of confirm it
with you so we can chat more about these awesome properties that we have out there as well and your real estate needs too.
Yeah, and as we always do, we are going to take some Q&A. I'm going to open that up, or actually I'm going to let Parker open that up and get that started. We had a couple of questions earlier on in the webinar that we didn't address, and they revolve around property management and probably directed to Malika. So do you want to go ahead, Parker?
Yeah, Malika, the first question that came in was, what is the process for screening prospective tenants for Arrington Rentals?
Okay, so what we do, they do an application. It asks generalized questions. We verify, employment, how long they've been on their job, previous rental history. We do a credit check. We look at their credit. We do a soft background check, and it'll kind of like prompt us if we need to go deeper. So we do a combination of those things to determine if that tenant is eligible or not. If it's somebody that if they get everything is good, their job history is good, the income is decent, they can afford it, and their previous rental history, paid on time.
That's awesome. Yeah, very good.
I thought you were saying something I wasn't finished. But, yeah, so that's what we do. And a lot of times, we talk to them. Mr. Arrington, he's very involved with the applicants. He talks to them to get a feel out, for their situation because, different people have different situations. So we try our very best to get a tenant that is going to be reliable.
Yeah, very good. Hey, Ken, I had a question come in regarding the financing. In terms of the time frame for your close, what's the average time to, from application to closing that you're seeing today? Are you able to get it done pretty quickly?
30 days is a typical time frame that we like to work with. If it's something more urgent, I can't imagine what it would be. We can go faster, but 30 days is what we like.
And in terms of fees, would you say that you're on the lower spectrum of what lenders charge, or maybe you can give us some insight into that?
The only fee that we actually charge is an underwriting fee. All the other fees that make up the closing costs are third-party fees such as attorney fees, appraisal, state taxes and stamps, that sort of thing. So our underwriting fee is only $495.
Yeah.
There's no processing fee.
Go ahead. I'm sorry.
Pardon me?
No, I'm sorry. Go ahead. I didn't mean to interrupt.
Some lenders charge a processing fee, which is we don't charge. And one of the things that is a really major advantage of doing business with me locally is that our underwriters and processors are all on site. So in the world of lending, that is a huge advantage in that you're right there with your people when you're processing a loan. You can walk right across to the desk and discuss an issue and resolve them pretty quickly. So that's part of what I was referring to earlier about making the process simple and as stress-free as possible.
Awesome. Thanks so much, Ken. I really appreciate that.
You're welcome.
All right, let's take a look at a couple other questions here. Okay, here's a good one. Military-wise, I get this question quite often too. If they get a official deployment order, they are eligible. All the leases state that you have to release your military tenant from their lease obligations if they have deployment, right? That actually happened on my property, and obviously I was sad to see them go, but they paid their rent in full, and they were out like on the 12th of the month, and then before that next coming month, I already had a new tenant dialed in. So it really was like not a factor, and I chalked that up to a strong tenant base there. But I wanted to address that question that yes, if you have a military tenant, not all tenants are military. There's a lot of other civilian employment and civilian housing But if you do have a military tenant, you need to understand that there will be a clause in there that if they do get active duty papers, that they're able to get out of that lease obligation. This is a good question too. When a property's in between tenants, right? What happens to the utilities, right? Because generally utilities are in the name of the tenant. So do they transfer back to the owner, or do they stay on? How does that work? Malika, you want to tell us?
Sure. We can do it two ways. Some of my owners are set up to have it revert back to them once the tenant moves out. And then most of my owners, we turn it on in our names, in Arrington's names, and then we bill you for that invoice.
Yeah, that makes sense. Either way, the answer, I guess, is that the tenants, the utilities stay on in between tenants.
Yes.
Yeah, I was pretty proactive, so I like to have it revert back to me personally, and then just pay the bill directly. But that's a nice service that you guys add to do, pay it yourselves, and then bill through monthly statements the owners if they prefer more hands off.
Correct.
Awesome. Well, cool. I want to thank everyone for being on here, and it's been a wonderful webinar, very informative.
Yeah, and I want to thank everybody as well. Thank you, Malika and Ken out there in Clarksville. It's a little late, but I really appreciate you guys taking the time talking with the attendees tonight. I got one last question that came in. It was, what are the next steps? My contact information is right on the screen. If you did not already put in that day and time to talk about the next steps, feel free to shoot me an email, give me a call, whatever works best for you. To talk in more detail about your real estate goals and how to achieve those goals as well. If you guys do want a copy of this presentation, it is being recorded and will be posted on our website as well under the Learn tab. So I just wanted to thank everybody for taking your Wednesday night with us at Marshall Reddick and out there in Clarksville as well. And really appreciate it, and we'll see you at our next event and or the next webinar as well. Take care, guys.
Thanks.
Good night. Good night, everybody.